All right, so you found a bank-owned property and you want to make an offer. What do you do next? All right, so in my experience as a commercial real estate broker representing both buyers as well as banks and title insurance companies when they had REOs, real estate owned properties that they needed to sell, this strategy I've seen work out pretty well a number of times. Now, one caveat is this doesn't always work when you're in a multi-offer scenario, right? So if there's low supply, high demand, you might be competing against other offers. This may not work out for you. But if the property you found has been on the market for a couple months and or a year, this could work out well for you. First thing you have to realize is banks do not want to be property managers. They don't like maintaining properties. They don't like having to pay, for cost on a property, an asset, especially if it's vacant and not performing. They ideally want to get rid of that asset as quickly as possible so they can redeploy that capital into their banking operations. And so when I go in with an offer for a bank, what I try to do, if my client's able to, is we go in with cash, right? We're going to purchase this property cash. What that does is it expedites the timeline. Again, banks, timing is key. So we want to go in, we want to make a cash offer. And the cash, what it does for you is it eliminates the finance contingency where it might take you 30, 45, 60 days plus to get financing for that property. This is now out the window, which means you could close within 30 days, possibly 14 days, right? It's very attractive for an REO officer at a bank when they see that kind of offer come through. The other thing I'm going to add in there is we're going to purchase it as is. Some banks may require this automatically, but if you have that in your offer, that's going to be attractive as well. Now you are taking some risks. They're purchasing the property as is. You could still go through as long as you have it written up correctly and do your due diligence on the property, but that as is saying that the bank isn't going to be required to do those improvements, if you find something. Okay, so cash, short timeline on closing, and as is. Next thing I'm going to do, these are a couple just little tidbits that I've picked up over the years. 10% earnest money. So whatever my purchase price is, I'm taking 10% of that, and that's what's going to go into escrow. The other thing is tax prorations. Where I'm in the Chicagoland market, we might see like 5 to 10% on the tax prorations. With banks, there's no increase there. So we write up as 100% tax prorations. That means that whatever the tax bill was, that's the amount that they're going to use. We're not going to add any additional amount to that. So based on my experience of doing REO sales and representing both buyers and sellers, hopefully these tips work for you.